In the UK, Pillar 2 is not coming, it is here, and there's no longer a distinction between implementation and compliance. This throws up many challenges and risks for you as a tax leader as you try to navigate this overlap into 2026 and beyond. There are a lot of complexities with dealing with those two processes, particularly with the stakeholders for Pillar 2. What do you see are the key demands from those stakeholders?
There are quite a lot of different stakeholders that head of tax need to face, both internally and externally. Most of the head of tax need to report directly into the CFOs, and from a CFO position, that of course they want to know the group's overall readiness of the Pillar 2 compliance, and that including the potential impact on the ETRs from any potential top-up jurisdictions. And also including sort of internal budgeting, because this is a new tax, new compliance process.
And it's important to recognise that there are internal and external stakeholders, and it's easy sometimes to ignore some of those external stakeholders. We're all sometimes too internally focused. So you're right, there's the CFO internally, and that's the tax function itself, but also externally thinking about tax authorities like HMRC in the UK, but also other tax authorities across the globe, and auditors, group auditors, because both of those stakeholder groups are very interested in Pillar 2 compliance. Obviously, their focus is more on the core compliance and readiness. So from a tax authority perspective, for example, they'd be more interested in the end-to-end process and the governance over the end-to-end process. So, for example, are there formally documented roles and responsibilities? Is there a RACI matrix, perhaps even, documenting that? Are there controls in place around Pillar 2? And again, that should really capture the end-to-end process. Is someone in a position to test those controls? Maybe an internal audit function. It could be a third-party assurance provider. So tax authorities will really want to understand the governance around that end-to-end process. And external auditors will also want to understand what governance is in place, particularly where the top-up tax is potentially material, or there are other qualitative risks, which means that Pillar 2, by its very nature, is potentially a risk for the organisation. So they'll certainly want to understand the processes in place to accurately capture the top-up tax that's potentially applicable to that financial year. So different stakeholders, but to a degree overlapping requirements, I think.
What we're seeing now practically with local implementations of domestic top-up tax is actually there's a tension from a statutory materiality level as well, because the top-up tax calculation and the charging provisions means that there will be an impact on the local statutory accounts, which will be typically audited to a lower materiality. So actually additional detail can sometimes be required to respond to those queries from the external auditor at a very granular local level as well.
Yeah, with different rules implemented in different jurisdictions of how the overall top-up tax should be split between the group entities. Yeah. That just adds complexity for your auditing process.
There are clearly a lot of demands coming from the stakeholders. What do you see are the key challenges and risks arising from those demands?
So some of those risks and challenges will be more focused around the core compliance itself. So that could include data readiness challenges. Often as you implement the technology, you'll start to tease out some of those data consistency issues. Technology integration itself can be a challenge in a number of organisations, particularly more divisionalised, decentralised organisations. But also there's a commercial element as well, right? Because you can find yourself inadvertently tripping up one of the safe harbours, and that could result in unexpected tax charges. So it's really, really important that tax leaders have got a clear tax policy, that the organisation, so M&A teams, for example, group reporting teams are clear on when they need to contact the tax function around potential transactions to ensure that they don't inadvertently cause a Pillar 2 top-up tax to arise, which was not expected.
And on us building on that point, from both a stakeholder perspective and a risk perspective, many groups are still considering their response to Pillar 2 in terms of whether they want external support from an outsourced service provider, whether they want to buy in technology or build technology to manage Pillar 2 internally as far as possible. And that also means you need additional stakeholders involved in those discussions and those decisions, such as legal, procurement and IT. There's an operational risk here in terms of actually, will groups be ready to comply based on the lead time that's required to put commercial arrangements in place or to implement technology, because there are lead times for IT governance and approvals that an organisation also needs to navigate.
Yeah, and don't forget the buy-in from the provisioning team and all of the actual tax compliance team that they're already working on their existing system, which all the process works perfectly, smoothly, and until you want to change something, that it would just brings in so much disruption and wasting people's time, they would call it waste, to a new process. So you need to get buy-in from all the different internal stakeholders.
There is potentially a lot of disruption around implementing a Pillar 2 process. Again, whether it's those local business divisions, perhaps feeding the data, the group reporting functions, group tax functions, and wider functions. And the point around readiness and having a dry run, or being able to operate a dry run, is really important. It goes back to that point around providing assurance to key stakeholders. You'd want to be in a position really where you can demonstrate to a tax authority or to an external auditor that you have run a dry run process and it has been successful, or where you have identified challenges that you've addressed those challenges. That will help to provide them with confidence that you're in control of that process. Whereas if you're on the back foot, it's much harder to demonstrate that.
Yeah. And the other additional risk, sort of linking to the data readiness as well, is the operating model, like who is responsible for which data, who owns it, who is supposed to be supplier to the actual Pillar 2 process. Especially Pillar 2 is a global group-wide exercise. Therefore, you not only need to look at your own jurisdiction, subsidiary jurisdiction have to talk to their parent jurisdiction and vice versa. It's a whole group-wide exercise which everyone needs to be very clear of who does what in order for it to work.
So there are clearly a lot of challenges and risks for tax leaders to consider. Given all of those, where do you suggest they start?
So I would recommend that groups be focusing their attention on horizon scanning and being ready for the compliance deadlines that are imminently approaching. So for calendar year taxpayers, depending on the jurisdictions in which you operate, there are some local domestic minimum top-up tax filing deadlines before the end of 2025. That's obviously significantly accelerated from the deadline for the Globe Information Return, which follows in June 2026 for calendar year taxpayers. That is necessitating acceleration in a lot of these points that we've discussed, because groups need to be ready to be compliant with those local laws and local obligations as they fall due.
And it just linking to that, even before the QDMTT filing, there's registrations. We had a few came up last year already. So if the group hasn't actually properly sorted out their local compliance responsibilities, then they're just never going to know what they have missed. In addition to that, obviously, there's the CBCR reporting deadline coming up for a lot of jurisdictions. For the groups that are relying on the CBCR transitional safe harbor rules, that is one crucial deadline they have to capture, and they have to make sure the things goes in as the reporting for the group is accurate and can be relied on for Pillar 2 purposes.
I mean, the registration requirements are the immediate ask, but it's really important that the tax function doesn't lose sight of the technology implementation challenges, data readiness, training that wider stakeholder group in terms of what their needs are. So if you're a tax leader in-house, you obviously need to think about how do you split those responsibilities within your tax function. Is there one person who's dedicated towards Pillar 2? Is there more than one person? And does someone need to focus a bit more on the BAU type activities, like some of the registration requirements, and someone perhaps more focused on the technology implementation and data readiness? Because otherwise it's very easy to see how those competing priorities can cause real challenges for tax functions. So I would certainly be thinking about that as a tax leader.
And how do you integrate Pillar 2 into your existing approach to compliance management? Because a number of groups that I work with split responsibility within the tax department, either operationally between, say, advisory, compliance and tax reporting. So who owns Pillar 2 in those contexts is really important, but also geographically, in particular for clients who are headquartered in non-implementing territories. Then there's potentially a split of responsibility between, a group team at the headquarter level versus, who's responsible for operational compliance outside of the headquarter jurisdiction. Where does the Pillar 2 responsibility lie in those contexts as well is really important to get clarity on.
Yeah, so I think in terms of phasing it, you first of all need to really agree what that operating model looks like, and that split of responsibilities between group and subsidiaries and wider business units. So then we have the technology implementation, there's some of the data readiness challenges linked to that, the training, the awareness and the governance. There's quite a bit to do. And then we have the registration requirements on top. So there is certainly a lot to do for tax leaders. And it's just really, it's really worth thinking about how you split those responsibilities and where you focus your attention and where support is needed. And often groups will need support from external providers, particularly around guiding them through that technology implementation and some of those data readiness challenges.
So there's clearly a lot for tax leaders to be thinking about, from data all the way through to their compliance. You've provided us with a lot of practical tips today, so thank you very much.